Good morning, friends. Till now, we understood that bank is a financial institution that accepts deposits from the public and creates a demand deposit while simultaneously makes loans. Right? A bank is a financial institution which deals with deposits and advances and other related services. Bank provides various services related to money or financial requirements of customers. That is, salaried person, businessman, or business organizations. We also understood that various types of banks. There are various types of banks. For example, central bank, commercial bank, cooperative bank, exim bank, and so on. Today, we are going to focus on commercial bank. Friends, do you remember what is commercial bank? Commercial banks offers customers and small to medium sized businesses with basic banking services including deposit accounts and loans. Two functions are important: deposit accounts and loans. These banks make money from various varieties of fees and by earning interest income from loans. Banks have traditionally been located in physical locations, but a growing number of now operates exclusively online. You know this. Commercial banks are important to the economy because they create capital, credit, and liquidity in the market. The commercial banks play an important role in economy and social development of a country. In India, commercial banks are divided into three groups. We have already studied this. Just recap it. The first group is public sector banks, where majority of capital is held by government such as State Bank of India. The second group is private sector banks. These are owned by group of individuals such as HDFC Bank. And the third group is foreign banks, and those banks which are established outside India but these banks have branches in India are called foreign banks such as Citibank, HSBC, Standard Chartered, etc. Now, I am talking about commercial bank as these banks provide number of services to us. Welcome friends to the next lecture of Organization of Commerce and Management subject. I am Mrs. Neeta Iwale. We are studying fourth chapter, that is business services. As I stated, commercial banks perform number of important functions to their customers. So today we are going to understand these functions. Let's start. See, commercial banks are profit-based institutions. Don't forget that. These are profit-based institutions that offer financial products like loans as well as services like deposit, electronic fund, transfer fund, etc. to their customers. Commercial banks have a significant role in country's economy as these organizations fulfill the short and medium term financial requirements of industries. Functions of commercial banks are primarily based on a business model of accepting public deposits and utilizing that funds for various investment purposes. Such functions can be classified into two categories, that is primary and secondary functions, right? And primary functions can be further classified into accepting deposits and granting loans and advances. Secondary functions can classified further in two groups, that is agency functions and utility functions. Let's see in detail. What are the primary functions? Now, primary functions of commercial banks are known as core banking functions. Okay, core banking functions. The primary functions are as follows. The first group is accepting deposits, and second one is granting loans. We know that. Right now we will see what is accepting deposits. The bank takes deposits in the form of saving, current and fixed deposits. The surplus balances collected from the firm and individuals are lent to the temporary requirements of the commercial transactions. Commercial banks collect deposits from individuals and organizations. The deposits can be classified into two types. They accept deposit in several forms according to requirement of different sections of the society. And these two types are time deposits and demand deposits. In time deposits, we can classify further into two groups, that is fixed deposit and recurring deposit. What is time deposit? Time deposits are called as time deposits because they are repaid to the customers after the expiry of decided time. Okay, so those are called as a time deposit. See what is fixed deposit. Fixed deposit account is an account where fixed amount is kept for fixed period of time bearing fixed interest rate. Rate of interest is more as compared to saving bank account and varies with the deposit period. Normally, withdrawals of amount is not permitted before maturity date. However, depositor can withdraw amount before maturity date, for which bank will reduce the interest rate. For amount deposited in this account, a fixed deposit receipt is issued by the bank, which is called FDR. Against these receipt, loan can be taken from the bank. This is very important from the point of view of customers. Okay. See what is recurring deposit. It is operated by salaried persons and businessmen having regular income. It is convenient for the persons who have regular income. A certain fixed sum of money is deposited into this account every month. Withdrawal of accumulated amount along with interest is paid after the maturity date. Rate of interest is higher, which is similar to fixed deposit account. Separate passbook is provided to know the position of RD account. Okay. Now see demand deposits. Demand deposits are those which are repaid to customers whenever they demand. That means money can be withdrawn as per the wish of the customer through withdrawal slips, checks, ATM cards, online transfer, etc. Here we will see two types, saving accounts and current accounts. What is saving account? It is generally operated by those who earn regular or fixed income such as salary or wages. The main aim of this deposit account is to encourage habit of saving among people. These deposit accounts are meant for the purpose of maximum saving. There are restrictions on withdrawals limit from these accounts. These accounts carry low interest rates. Interest is credited monthly, quarterly, half yearly and yearly basis on this account. Passbook facility, balance on SMS, account statement, etc. facilitates are provided to the account holder to ascertain financial position. For saving account holders, some banks provide separate facility of flexi deposit. The facility combines the advantages of saving account and fixed deposit account. This is not separate deposit account. It is a type of saving bank account or current deposit account with special features and benefits. In case of multiple option deposit account, the excess amount of a particular limit get automatically transferred to fixed deposit. When adequate funds are not available to honor payments or checks in saving account, funds get transferred from fixed deposit to saving bank account. Let's see about current account. The current account is operated by business firms and other commercial organizations such as hospitals, education institutions, etc., who have regular banking transactions. In this account, there is no restriction on deposits and withdrawals of amount. No interest is paid by the bank on this account. Don't forget that no interest is paid by the bank on this account. In which account? Current account. Overdraft facility is available for this account. Now see, there is no interest but overdraft facility is available for this account. For current account, banks provides statement of account each month. Let's see the second part of primary function, that is granting loans and advances. Another crucial function of this bank is to offer loans and advances to the enterprises and business people and collect interest. For every bank, it is the primary source of making profits. Okay, so this is the primary source of making profits for the bank. In this process, a bank retains a small number of deposits as a reserve and offers the remaining amount to the borrowers in demand loans, overdraft, cash credit, short-term loans, and more such banks. The loans are provided for longer period of from 1 year and more. Advances are provided for shorter period from 4 months to 1 year. The advances are in the form of cash credit, overdraft, and discounting of bills, etc. Banks grant loans and advances to business firms and others who are in need of bank funds. Let's see one by one. First is loans. Commercial banks provide loan to businessmen and other individuals. The borrower can use entire amount sanctioned or can withdraw in installments. Interest is charged on the amount sanctioned. The loans are classified as follows. Short-term loans, that is, these are for a period of 1 year, means up to 1 year to meet working capital requirements of the borrower. Next one is medium-term loans. These are for a period of 1 year to 5 years to meet working capital as well as fixed capital requirements of the borrower. And next one is long-term loans. These are for a period of 5 years or more to meet long-term capital requirements of the borrower. Let's see what is advances. Advances are small term funds provided to businessmen to satisfy different financial requirements of the firm. Advances are as follows. Cash credit. The cash credit advances are provided to current account and saving account holders. It provides working capital for long period of time. Interest rates is higher on CC. Separate CC account cash credit, that is CC means cash credit, separate cash credit account has to be maintained by the borrower. Next one is overdraft. This facility is offered to current account holders to meet their working capital requirements. The period can vary from 15 to 60 days. Interest is charged on actual amount withdrawn. No separate account is maintained and entries are shown in current account. Don't forget that no separate account is maintained in case of overdraft. It is a temporary arrangement for a short period. Next one is discounting of bills of exchange. The drawer of bills of exchange or beneficiary can discount the bills with the bank and obtain an advance. On the due date of bill, the bank will recover the amount from the drawee. Now let's see what are the secondary functions of commercial banks. Secondary functions can be classified into two groups, that is agency functions and utility functions. First, we will see agency functions. A commercial bank acts as an agent and representative of its client and performs certain functions as follows. First one is periodic collections and payments. Commercial bank collects salary, dividends, interest and any other income periodically, as well as makes periodical payments such as taxes, bills, premiums, rents, etc. on standing instructions provided by customer. Okay, it is important that the customer should give standing instructions to the bank. Commercial bank charges certain fixed amount quarterly or annually in the form of service charges from customer for providing such services. Next one is portfolio management. Large commercial banks undertake to purchase and to sell securities such as shares, bonds, debentures, etc. on behalf of client. This handling of securities is known as portfolio management. Okay, this is called portfolio management. Due to this facility, more clients are operating for such service of commercial bank. The next one is fund transfer. Commercial banks provide facility of fund transfer from one branch to another branch or branch of another bank also. Commercial banks come with various initiatives to make these transfer hassle free. Next one is dematerialization. Banks provides these facilities to their clients to hold their securities in an electronic format. In which format? Electronic. On behalf of clients, it undertakes the electronic transfer of shares in case of purchase or sale. And the last agency function is forex transactions. Forex is an abbreviation of foreign exchange. Okay, don't forget that. What is forex? It is an abbreviation of foreign exchange. A bank may purchase or sell foreign exchange on behalf of its clients. A bank purchases forex from its clients, which the clients receive from foreign transactions, and sell the forex when the clients need it for overseas transactions. Okay, let's see what is utility functions. A commercial bank performs utility functions for the benefit of its clients. It provides certain facilities and products to its clients as follows. First is issue of draft and checks. A draft or check is an order to pay money from one branch of bank to another branch of the same bank or other bank. Okay, what is check? Check is an order to pay money from one branch of bank to another branch of the same bank or other bank. A bank issues drafts to its account holders as well as non-account holders, whereas checks are issued only to the account holders. Don't forget that checks can be issued to only account holders of the particular bank, but drafts can issue to the account holders as well as non-account holders of that particular bank. Bank charges commission for issuing a bank draft. Okay. Locker facility. Commercial banks provide locker facilities to customers who want to store valuable things or valuables in safe. Locker facilities eliminate the impending risk of theft or loss which prevail when kept at home. This is common utility facility of any commercial bank. The bank provides locker facility for the safe custody of valuables, documents, gold ornaments, etc. Next one is project reports. A bank may prepare project reports and facilitates studies on behalf of clients. Do you know what is project reports? Okay, project reports enable the business firms to obtain funds from the market and obtain clearance from government authorities. So you can understand how they are valuable for businessmen. Next one is gift checks. Bank issue gift checks and gold coins to account holders as well as to non-account holders. The gift checks or coins can be used by the client for the purpose of gifting on occasions like wedding, birthdays, etc. Fifth one is underwriting services. A commercial bank may underwrite the issue of securities issued by companies. If the shares are not fully subscribed, the underwriting bank agrees to take up the unsubscribed portion of the securities. I think you have understood what is underwriting of shares in SP subject, right? Next one is gold related services. Nowadays, many banks are providing gold services to its customers. Bank can commercially buy and selling gold or gold ornaments from customers on large scale basis. Some bank also provides advisory services to its customers in term of gold funds, gold ETF, etc. Now today we understood functions of commercial bank. Let's have a quick recap. Friends, today we understood different functions of commercial banks. Hope you got it all. In next lecture, we will discuss e-banking services. Thank you for watching today's lecture attentively.